This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pashurdiz. Thanks for joining us at XM.com. The relentless rally in U.S. stock markets took a breather last week. Wall Street suffered a rare pullback as investors took some profits off the table, positioning for a new regime of fading central bank liquidity, moderating growth, and higher taxes. Sure, the sell-off was rather shallow, and equity traders are already in a better mood this week, but looking into the autumn, there are several risks that could play havoc with markets. The obvious boogeyman is the Fed and the push to slash asset purchases this year. While the threat of tapering alone was clearly not enough to scare markets, it might be if it's accompanied by tax increases. The Democrats are trying to pay for their gargantuan $3.5 trillion investment plan by raising corporate and capital gains taxes, as well as introducing a 2% tax on stock buybacks. That would be a triple whammy that capital markets cannot ignore, even if the overall package raises the productive capacity of the economy in the longer run. Therefore, the next few months could be challenging for equity markets, with the Fed closing the liquidity taps while Congress goes after businesses and investors in an environment where growth is already losing speed and valuations are unforgiving. Of course, any weakness could ultimately present another buying opportunity as the macro landscape remains solid. Meanwhile, the regulatory drama in China continues to torment local bourses. In contrast, the gravy train keeps on rolling in Japanese equities. The Topix index hit a new 3-decade peak today, supercharged by hopes that the next prime minister will embark on a powerful spending spree to battle the virus and chronic deflation. In Forex markets, the only real mover has been the US dollar, which drew power from the recent defensive tones and some minor gains in treasury yields. With the Fed now in its blackout period, the greenback's fortunes hang on the upcoming US inflation and retail sales numbers this week. Politics will likely become a bigger theme moving forward, with crucial elections scheduled in Canada, Germany, and Japan. Even though options markets suggest the German election will be a muted affair for the euro, with implied volatility in euro-dollar being relatively low, the outcome could still be crucial for European economic policy and for opening the door towards a fiscal union. This is today's Daily Market Comment. Thanks for joining us at XM.com.